Hey everyone, I'm Eric Thompson. I'm president of Windermere Real Estate here in Colorado. I'm making this video for you as a recap to our market forecast. If you made it to the event, thank you so much for being there. If you didn't make it, we hope to see you there next year. In any case, I'm going to make this recap for you to show you the highlights. I want to start by thanking our sponsors of the event. Elevations Credit Union was our presenting sponsor. We appreciate them. And then we had Old Town Media and Legacy Home Inspections also helping us out. So big thanks to them. Real quick, a little bit about our company, Windermere Real Estate. In case you're not familiar, we're located in these markets. So we're all over the Western U.S. We have 6,500 agents, 300 offices in 10 states plus Mexico. We're growing all up and down the Front Range. We're pretty excited about our growth here in Colorado. We're famous for a couple things. We're famous for the Windermere Certified Listing. That's where we pre-inspect our listings before they hit the market. It helps our sellers to uncover items that the buyer will find out anyway. It also helps our buyers in that we can be transparent with them and show them the items that we found and how we addressed each one of those items. Another thing we're famous for is our market information. So Matthew Gardner, our chief economist, he produces a quarterly report called the Gardner Report. We're happy to get you a copy of that if you would like that. And then also we produce every month the Windermere Report. That's our monthly printed newsletter. We can mail that to you. It shows you the trends and the data and all the stats and facts about what's going on in the Northern Colorado market. We're happy to get that in your hands if that would be helpful to you. So here's the question that we get asked all the time. We get asked the question, how's the market? How's the market is a great question. We love that question. We love to talk about the metaphor of a staircase. So the way we describe what's going on in the market right now, we use this metaphor of a staircase, and specifically what we talk about is running up a flight of stairs. So here's the thing. Over the long term, our prices have gone up on average about 5.5% per year. After the Great Recession, that pace, of course, slowed down, right? Because the economy slowed down. So then what happened between 2013 and 2018, we ran to catch up. And when you run up a flight of stairs, you get tired, all right? And that's what we saw happen in 2019. The pace of acceleration slowed down because we just got tired from all the running up the stairs that we had been doing, all right? So the long-term average price appreciation, again, is 5.5%. This is what happened as we were running up the stairs from 2013 to 2018. You can see what's happening in each of those individual years. Considerably fast price appreciation, higher than the long-term average. We were metaphorically running, so we got tired. So what happened in 2019, we went up at a rate of 4.5%. So just slightly below the long-term average, but prices still going up, just not as fast. So here's what we noticed about the market. Prices are going up, just not as fast as they were. There's less crazy and drama in the market, which buyers tend to appreciate, sellers too. But compared to a couple years ago, there's not all the craziness and drama that had been occurring. This is a metaphor we like to use. So, you know, a couple years ago, the market was really frothy, almost boiling over. Today, it's a nice, mellow, low simmer is what we notice right now about the market. So, as the market gets more back into balance, buyers realize that they have more leverage than they had before, and sellers now are held to a much higher standard than they were before. So things that a seller could get away with a couple years ago is not working today. So a couple years ago, a seller could overprice their property and the market would catch up, or they could not worry so much about condition and there was so much activity where buyers wouldn't care. That's not the case today. I showed this picture 2 years ago at our market forecast event. This is a real life scenario where we had 14 offers on a property after it being on the market for 24 hours. So that's a picture of the market 2 years ago. This is a picture of the market today where we expect to get an offer within a reasonable amount of time. So we're not getting 14 offers in 24 hours. We're getting an offer in a reasonable amount of time, as long as the property is priced right and also in correct condition. So what we see now is that the market is becoming more normal, but it feels abnormal because it's been so long since we've seen a normal market. We had at our event, as we always do, our chief economist come out to be our keynote speaker. So Matthew Gardner is the Windermere chief economist. He is the only chief economist among any real estate brokerage in the country, so we're really lucky to have him on our team. I'm going to show you now just a handful of slides that he showed at our forecast. If you want to get all the slides, we can get those in your hands. We're happy to do that for you. So we started with the U.S. economy. So Matthew started his presentation presentation with a big picture look at the U.S. economy. And the question that we get a lot of is, so what's going to happen in the next recession? When is the next recession? Starting with that question of when. So one thing to keep in mind is that it's been 127 months since our last recession. The economy has been growing for many, many months in a row. So in some ways we're kind of due when you look at the length of time since the last recession for each of the last recessions. So you can see on average a short amount of time that we notice now. So we're kind of due for a recession. But the thing is, we don't see one coming this year. So when Matthew Gardner looks at these 4 indicators, which by the way are his canary in a coal mine, these are the 4 indicators that would tell him that we would have a recession in the next 12 months. He really doesn't see all 4 of these happening. So the yield curve. The yield curve is kind of an advanced economic term, something that they look at, and they look for the yield curve inverting. It did invert a few months ago, but then it reverted. So that one actually did happen, that indicator, but the other 3 did not. So we see right now very low unemployment across the country. The manufacturing index is not telling us that there would be a recession, and then consumer sentiment remains high. So Matthew Gardner says he does not see a recession in the next 12 months because of these 4 things, and specifically all 4 of these things are not happening. So he feels good about the national economy. Specifically what he predicts is continued growth in the national economy at pretty much the same pace that we're experiencing right now. So overall still healthy economic growth nationwide. All right, so a little bit about the U.S. housing market. Let's start by, since we were just talking about recessions, let's start by looking at what happens to home prices after a recession. Well, for the most part, home prices before and after a recession look pretty much the same. In some cases, prices go up slightly at the end of the recession, except for what? Except for the last one. So the last recession is when prices went down at the end of the recession compared to the beginning. Why is that? Well, that's because housing caused the recession in the first place. So for the most part, recessions don't cause a big drop in home prices. By the way, a great quote that Matthew Gardner has, he says, the next recession compared to the last one will be boring. You know, we all remember how severe the last recession was. He thinks the next one will be boring. Okay, so a little bit about nationwide home sales. So what he does expect is that the number of transactions nationwide will go up this year 2.7%, still nowhere near the almost 7 million homes that we were selling back pre-bubble, but still a nice healthy increase in the number of transactions per year. And then we do see home prices going up nationally, home prices going up 3.7%. That's what he sees as the national increase. So overall what that means is that nationally the home sales market is really healthy. Okay, so another dynamic right now that's interesting to look at is the length of time that we're staying in our homes. So the length of time in our homes has pretty much doubled. So in the early 2000s, we were staying in our home an average of 4 years. Now it's up to 8.2 years is the average tenure in our home. So there are just more people who are more willing to stay in their homes for a longer period of time. Part of that is driven by the low interest rates. People really like the low interest rates that they have right now, and that is not a reason for them to move. We get asked a lot about, is there a housing bubble? And people look at what prices are doing now compared to the last bubble. And Matthew Gardner took this a step further and came up with something pretty interesting related to that housing bubble question. You may have heard about the Case-Shiller National Index. They track 20 markets all across the country. The blue line shows you what those 20 markets have done all the way back since the middle of 2000 up until today. So you can see the bubble forming, the bubble bursting, and then you can see what prices have done since then. And some people say, geez, we're up so much compared to last time. But what Matthew did with the red line is he added in inflation. So when you adjust for inflation, we're still 5.8% below this prior peak back here. So that's just one of many indicators that tells us that we don't have a housing bubble right now. Okay, so affordability is a big question, something we get asked about a lot. People are noticing affordability as an issue. It is becoming an issue. And we look now at research that comes from the National Association of Home Builders, where they look at the percentage of homes that you could buy in a particular market with that market's median income. So nationwide, the average is just under 64%. So what you're looking at is a list of the most affordable markets in the country. A lot of places obviously in the Midwest. And then when you go look at the least affordable markets in the country, they're all in California. Kind of funny enough, they're all in California. By the way, that's why so many Californians move here. But you can see here in northern Colorado and Fort Collins, just over half of all homes are attainable, are affordable with that markets, with our market's median income. So just an interesting look at affordability. Interest rates is a big deal. Of course, that's something that directly impacts housing. This is Matthew Gardner's prediction for interest rates. What he predicts is that rates will not go above 4% until at least the first quarter of 2021. So we have a year, give or take, at least of below 4% interest rates. That is incredibly low. That's roughly half of the long-term average. So right now is a terrific time for buyers to take advantage of those low rates. Something that we noticed change back in the middle of 2017 was the number of people buying a home versus renting. So we had several years in a row, starting in 2009 up until mid-2017, where there were more renters than owners, more people entering into rentership than ownership. But then that changed in mid-2017. So back here, a lot of people were saying, you know, we're going to be a nation of renters. People will never want to own again. Well, that's just not true. What happened here is that millennials entered the home ownership part of their life. They hit the part of their life where it made more sense now for them to own, and that's what caused the change. So a little bit more about millennials, and we spent several time talking about the millennial demographic at our economic forecast because they make such an impact on housing. One thing that's interesting is to look at their makeup of all home buyers. So this is a percentage, we just looked at some of the major markets where Windermere serves. This is a percentage of the home buyer population who are millennials, right? And you can see for the most part, they're kind of in the 30 and 40%, and Fort Collins is right there. 41% of all home buyers are millennials. So a fairly significant portion of all of our home buyers are millennials. They're not only the largest demographic, but obviously a significant part of all home buyers. Okay, now a little bit more about this housing bubble question. So because we get asked this so often, we asked Matthew Gardner to spend some time on this and walk us through the reasons why he does not see that we're in a housing bubble today. And believe me, he spends time looking for those bad things that may be on the horizon. He does not see any evidence of a housing bubble right now. So a few reasons why. Number one, credit. Overall credit scores of buyers is very, very high, which is way different than back pre-bubble, back 2005, 2006. Overall credit was low among buyers. There were a lot of people getting loans who should not have been receiving loans, but today the average buyer has a FICO score of 755. That is incredibly high. Another reason why we're confident that there is no bubble is that overall people have a lot of equity in their homes. So look at this. This is showing the overall value of all real estate owned. 29 million, this is the debt, 10 million, so it means, trillion, so this means almost $19 trillion of equity exists nationwide in people's homes. So $19 trillion of equity exists overall in people's homes, so there's a lot of equity, so that gives us confidence that there's not a bubble. Another big one is when you look at the percentage of ARM mortgages that are being given right now to buyers. So in 2004, over a third of all buyers were receiving an ARM. That, of course, it stands for an adjustable rate mortgage. Today, that's just not happening. Today, only 5% of all buyers get an adjustable rate mortgage. So when you have an adjustable rate mortgage, that makes you more susceptible to changes in your life or changes in the economy. That's why so many people were walking away from their homes, because their rates went up, their payments went up to a point where they couldn't make those payments anymore. So a little bit about the northern Colorado economy and a look at how our employment grew over the last year. Look at Fort Collins and Greeley excelling and exceeding other cities in Denver, and with considerably high growth rates. Really any rate over 2% is considered to be a really strong economic number, and you can see the performance of both Fort Collins and Greeley. We have strong economies here, no surprise. How about unemployment? So this is another indicator of the overall health of our market. So unemployment locally, 2.2%, which is below Denver and also below the Colorado average and below the national average. Nationally, it's only 3.5%, but here locally, it's just over 2%. We have an incredibly strong economy right now that also is very diverse, all the way from agriculture to technology to healthcare to universities. That's what's driving this unemployment to be so low, which of course makes for great news when it comes to local housing. So a little bit about local housing. We'll look at Larimer County and then Weld County. So no surprise, you can see that prices have been going up, gone up a little over $150,000 on average price since 2015. The blue bar shows the number of transactions. So the number of transactions has trailed off because inventory has been low, but the good news now is that we're seeing inventory start to come back up. In Larimer County, this is a really interesting stat. 37% of all homeowners have at least 50% equity in their homes. Right, so here in Larimer County, 37% have at least 50% equity in their homes. Only 2.4% of all homeowners are underwater. So what do we predict? So this is our main slide when it comes to our predictions for 2020. What Matthew Gardner predicts for Larimer County home price growth to be 4.4%. So we grew at 4.5% the last 12 months. What he expects is another year with just slightly below the long-term average, 4.4% price growth in the year 2020 based on all the factors that we talked about. Now just a quick look also at Weld County. So you can see similar trend, no surprise, with home prices have been going up. The blue bar shows activity for transactions. Now we'll look at that same equity slide. So in Weld County, close to 30% of all homeowners have at least 50% equity in their homes, and still a very low number that are underwater. And then this is our prediction for Weld County. The prediction for Weld County, 5.8% is the home price appreciation prediction for Weld County. And so that sums up what we see in northern Colorado. So right now, I'll finish with the opportunity. So there are a few places where we see really clear opportunity in the market for both buyers and sellers. First, we see opportunity for the move-up buyer. So this is just a quick example of a family that we helped recently. So they bought this home in 2015. They paid $245,000 for it. Sold it for $322,000, which meant they could bring a considerable amount of equity into their dream home that they bought this last year. They paid $444,000, but between the appreciation that they saw in this home, the fact that the mortgage was paid down over time, they brought great equity to this home and kept their payment close to being the same. So that's just an example of opportunities that exist for the move-up buyer. This is another family that we helped recently. So they bought this townhome, paid $208,000, and then they were able to sell it for $325,000. They bought their dream home, backs up to open space, brand new dream home. They paid $679,000, and they brought the equity from this home to be able to help them buy this one. So there's a clear opportunity right now for the move-up buyer. The next opportunity we see right now is for the investor, and particularly the first-time investor. These are just two quick stories of investors that we helped out who were first-timers. We helped them out just this last year. These folks put 25% down. When they bought it, there were already renters in the property paying $1,900 a month, so they're realizing cash flow on this property. In this scenario, we helped a woman who was retired move some cash out of the market, invested in this piece of property, rented at $2,000 a month, so this is helping her with her retirement income. And we're happy to help you. If you're a first-time investor, think about investing in real estate. There's a way that we can help you that I'll tell you about in just a moment. And then the last opportunity we see is for sellers who can shine on day one. So if you're a seller, you're considering selling in 2020, it's important for you to shine on day one. This is just an example of some homes that we have listed for sale. Today, it's important that we really get it right on condition, on the marketing, photography, and also the price, because again, buyers are more discerning. Okay, so what do you do next? If you would like even more information like this, we're happy to help you in a few ways. One is we're happy to get you these slides, or even the slideshow from the whole presentation. You can also get added to our VIP list, where we'll send you our newsletter every single month. It's a printed newsletter called the Windermere Report. We'll send you, if you want, the investor checklist. So that's a great checklist for the first-time buyer. first-time investor thinking about investing in real estate, it just shows you step by step for what you can think about to start the process of investing in real estate. You also may wonder, what's your home worth today? So if you're wondering, what is my home worth today, given all this talk about appreciation, even if you're not thinking about selling, we're happy to put that snapshot together for you to show you what your home may be worth today. So if you'd like any of those things, what you want to do is you want to email us at colorado@windermere.com or reach out to your Windermere realtor. They'd be happy to help you with any of these items. Again, I want to thank you so much for engaging with this video. Thank you if you came to our forecast this last year. We hope to see you next year, and I hope to see you soon. Thanks a lot.